Want to bring in Blenheim Capital Management Chief Economist Mickey Levy, who's been watching markets for, I don't know, 20 years, Mickey?
Longer than that, and a long time. And Maria, I'm at Berenberg Capital.
Berenberg Capital. This is a new firm for you. Tell us about the firm.
Well, it's a great firm. It's a private German bank, big in capital markets in Europe and expanding into the U.S. And I'm very happy there and taking a big global look on things.
Great, good for you. My apologies there for that. Thank you for the correction. In terms of the global markets, how do you see things? Break it down for us, because actually Kevin has some also opinions on Europe. What's your take on where we are right now?
In Europe?
No, the globe.
Okay. Somewhat slower growth. Clearly, China's been slowing for a couple of years. It didn't all of a sudden happen this summer. So China's been slowing. Its potential growth is slowing. Associated with that, you see a decline in commodity prices in oil, and that's really a negative drag on some emerging nations that are exporting commodities, a big drag. Now, beyond that, U.S. is doing just fine, Europe is doing just fine, China's a little more affected. So in the U.S., what we're seeing is slower growth in exports with a stronger dollar and somewhat slower growth in Asia. But domestic demand, that is consumption, housing, and the like, are just fine.
Do you agree with that, Kevin?
Yeah, I mean, we would agree with that. You've got to be selective, especially when you're going to Europe. You want to be in those companies that actually benefit from the weaker euro. So we've seen that with a lot of the German companies, right? They're 30% of the GDP in Europe. They're an export nation. So they're actually benefiting from the weaker euro. So as well as domestically, they actually benefit from the U.S. Their top trading partner is the United States.
Okay. And
no, Mick, I was curious, though, so maybe the U.S. and Europe have a little bit of a cough from what's going on in these emerging nations because of the collapsing commodity prices. But what's the likelihood it does get worse? Do you think people are underestimating that we wind up bedridden, so to speak, in this economy and in Europe?
No, in fact, I think they're overestimating the concerns. Kevin, I really liked your point. That is, what he introduced here is, yes, Asia's slowing with China slowing down, but there are offsets. The weaker euro is benefiting core European exporters. In Europe and the United States, we're benefiting tremendously from the lower oil prices and lower commodity prices.
Which is what Dagen thinks happens in the U.S. in the fourth quarter.
So there are nice offsets. Once again, the U.S. consumers are in good shape. Employment is growing. We had a weak number, but real disposable incomes are rising in Europe as well as in the United States. So we have to think about the offsets. Now, in some of these emerging nations that export commodities, they have no offsets and they're really getting hit.
Right. So when you look at valuations, you also want to put valuations on there. Back to the U.S., valuations in biotech, for example, is one area that you find opportunistic.
Yeah, we think it's actually really opportunistic because it was sold indiscriminately across the board when there was a sell-off in the summer, as well as recent policy decisions that have been coming out there. But if you look at a company like Gilead Sciences, which actually benefits from the higher incidence of chronic diseases, so hepatitis C, HIV, they are trading at 10 times earnings, have a 1.75% dividend. And let's not forget, after they report earnings, they can actually go back into the market and buy back their own stock, which they have a huge stock repurchase program out there. So and they actually generate a lot of cash. So
look at that stock chart. It's really come down in the last 3 months or so. Is it going to get growing again because of acquisitions?
Yes. So part of their cash pile is they have a great management team that actually steps back, waits till they can opportunistically go in and buy other companies that have a good pipeline and they can assimilate into their company. And you've seen that. That's why the stock is up over like 17,000% since they initially IPO'd.
Wow. All right. Biotech's in the U.S. Any areas of particular opportunity from your standpoint, whether it's in the U.S. or Europe, in terms of sectors, Mickey? Do you agree with biotech?
I'm not really a sector analyst, but from a macro perspective, don't overstate the weakness here and don't take one employment number and extrapolate it forever. So things feel good, continued moderate economic growth, and I guess in terms of opportunities, expect continued expansion in the U.S., in Europe, somewhat slower global growth, and then just be patient and wait for opportunities.
So you think the Fed raises rates this year?
Oh, I hope so. It's almost it's painful to watch them. It would be an interesting debate about the Fed if the inflation-adjusted funds rate were flat, we're zero now, but we have a zero funds rate, and it's absolutely inexcusable. And I think what they're forgetting about is all of the major distortions they're creating. And it's not the fact that they've kept rates at zero, it really hasn't helped the economy.
Well, the market has actually shrugged off the Fed and actually has raised rates itself. You're seeing that on corporate spreads starting to widen. So actually the market's not even waiting for the Fed now.
Well, you're bringing up a scary point. We want our central bank to have credibility.
And yet, there you go. Mickey, great to have you on the show today. Thank you so much. Good to see you. Mickey Levy there joining us. Real quick.